And good afternoon. Welcome into Market Talk here on this Monday, April 25th. Great to have you with us. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our website. All of our streaming sources, our social media links are there. Latest news of agriculture, and much more. It's all at MarketTalkAg.com. Plenty to discuss as we start the new week. We saw a great day in corn and spring wheat. And, when it was all said and done, wasn't terrible throughout the rest of the grains. We came off the lows. Plenty to talk about. Let's bring in our good friend John Heinberg with Total Farm Marketing joining us here on this Monday. John, good afternoon to you, sir. And I think the lead story today, corn and spring wheat. A really strong day here to kick off the new week, John.
Yeah, it was. I mean, you start with the corn market and how it's behaved on the overnight session, selling pressure, and the Chicago wheat is obviously in the bean market, kind of at least drug corn with it. And it was kind of impressive to see the corn market just continue to kind of build some base here. I was actually kind of let out by that December 23 and those longer term contracts, solid double digit gains there, and putting some reversals back in those charts. And you can just see that strength just continue to build to a pretty good close today. So we'll have to see if we can get some follow through off of that over the next couple of days. Obviously, we're really keeping a couple things in front of us here. Where we are in the calendar, the time of the year, what's happening on the demand front, and obviously the focus on the weather, what's going on between the south and the north.
Yeah, and looking at corn, not a lot of corn planting's been done. We're not expecting to see much here Monday afternoon's crop progress report either, but hoping to maybe get some windows coming up here, at least southern states, and start working its way up into the central corn belt. But we are getting that calendar closer to May. I mean, that's going to start to become an issue. Although we do still have some time, we don't want to hit the panic button quite yet for corn.
Yeah, we do. Realistically, until you get about to that May 10th, 15th window, that's when you start seeing some potential yield damage coming into play from that later planting. But we got to watch these forecasts. We got, freeze warnings here tonight, high temperatures in the 40s again this week in southern Wisconsin. That's going to carry out into, out in Iowa, talking to a couple producers there. Things are just on the cold side, obviously. I think people are starting to move in some areas just because we got to, and we'll go from there and we'll see how it is. Now, I'm keeping a real close eye on what's happening up in the Dakotas. Obviously, they had the heavy snowpack here the last couple of days, and throw some moisture in. You got some flooding in some key areas, some areas of the state. It's maybe a little early to start talking about the whispers of a prevent plant type issue, but you're looking at a soil that doesn't like to dry out very fast, and cold conditions aren't going to help that at all. And that's some of where that spring wheat strength came from. We got a couple producers up there that have yet to get a single seed kernel in the ground yet for spring wheat just because of the weather. And the market's going to look at that and probably look at some acres being lost, and then potentially seeing some corn acres maybe being lost down the road too as well. And we already know where the supply picture is going to look like given that tighter acre number. Now let's see if we lose some off of there. Last year we didn't have a lot of prevent plan overall in terms of that acre numbers that came together. Or the prior year we did, and that very well could show itself again. You look at some of these long range forecasts again for those northern plains, and it still looks like we got more moisture coming in, another potential heavy storm again next week, and temperatures staying on the colder side. So that may have been some of what got into the corn market today. I wouldn't be surprised that we did see some more export business pop in. That Chinese purchase that we saw come published on Friday last week was another very good sized one. Again, me speculating, no proof behind it, but wouldn't be surprised that they're stepping in, picking up here with things on sale again too. So that may have been some of the pop that we saw in the price action today as well. So we'll just have to watch those export sales announcements and see where they come down the road, and see if we get any more bushels confirmed to help, potentially tighten up that supply picture.
Yeah, and on that weather front, like you mentioned, the heavy snows along the Montana North Dakota border, and then flooding in the Red River Valley. They needed the moisture in the northern plains badly, but it's almost like it's coming, maybe a month or two later than people wanted to see it. Because yeah, I think it's gonna be a while before they dry things out there across the northern border.
They made a quick switch in extremes in some of those areas, and obviously that's not the route we want it to go in terms of getting moisture in the ground. But yeah, it's going to be a definite building thing. Again, over time, we'll see how things develop, but this market's going to be very, very edgy regarding those types of issues because of the supply situation, because of the potential demand that's out there. So any type of weather headline that, even though it's still a long way away from becoming reality, is going to bring some premium.
You think maybe the corn market also getting a little nudge from some of that Brazil dryness that we're seeing in the forecast, John?
I think that's still a wait and see development. They're still going to have a pretty good crop, but yeah, that continues to be something that's growing. You're seeing more reports of it now. We're going to take some of the top off of this very possibly, and and again, when you got a market that needs every single bushel, there's a lot of pressure out there right now for us to produce a crop, and if we're missing just a couple metric tons off the top of that Brazilian crop. We're missing a few more acres due to weather. That's just going to really tighten up this global supply picture, at least all the way through into harvest. So keeps me a little friendly. We're seeing some money flow that doesn't look real good in the grains overall right now, just because. But the fundamentals are there. And this is also a seasonal window. You see a little bit of support in the corn market as well. So those things are at least pointing higher at this time frame. And like I said, the price action day was really good. We had a nice little correction off that most recent high for the last couple of days. And now we're maybe seeing some prices turn back up, maybe get sideways here, but moving back to the top of the range.
John, how about this soy complex? We were down sharply to start the day. We were down sharply in the overnights. And then, we kind of clawed our way off the lows here today. Now, last week we got the news about Indonesia saying that they're not going to export palm oil. And then coming back today saying they're going to allow crude palm oil exports, not the refined products. So, seems like that was maybe one of the big drivers of the selling in the soybean oil complex, and in turn in soybeans, along with these China COVID lockdowns again. But I mean, coming off at the lows the way it did, I'd almost consider it a win today in the soybean market.
Yeah, we'll still need some follow through and get a higher high in that type of trade tomorrow. But yeah, it was good to see us at least kind of reject those lows of the day. I'd say the crude oil market being $5-6 a barrel lower to start the day too was also part of that weight on that bean oil complex. There's just a few arrows that are pointing to the downside. Plus, right now we're looking at U.S. beans are not the best value nearby. And so that's going to keep a lid on this market overall, at least in the short term. The trend is working itself a little bit lower. We'll see if we found a little bit of a bottoming action. We did again have some reported soybean sales this morning. Most of those were new crop sales. We did have a portion of old, but that's still the area I'm kind of watching. We had this a couple of years ago. We had those strong aggressive sales in. And we got into the harvest window. If we remember correctly, all of a sudden we needed those beans at the port. We saw the basis levels take off. We really rallied hard at harvest, and we're kind of maybe building that same type of picture. So longer term, still friendly to the bean market. Again, right now it's a market that traders like to move in and out of. We'll keep an eye on that soybean oil or that palm oil situation. We also have Malaysia today too, make recommendations to pull it out of the biodiesel component to take care of food supplies. So that might have been a little headline to also put some selling in. There's still a lot of pieces of the puzzle there. Biggest thing is with the Indonesia issue, even though they're going to allow crude palm oil exports, it's still only a small percentage of their total exports. And you got the sunflower oil issue in Ukraine. You're still looking at 20 to top end 40% of global exportable oils not in the marketplace. So, again, we might be seeing a little money flow here as well, but realistically, still like the bean market going forward. But we may just have to take a little while to get through some of those South American supplies and watch them tighten up because of that dry weather before we really see that strength longer term.
As well, kind of factoring in, you mentioned crude oil down today. Stock market also under some pressure early. The VIX up near 30. So it just felt like a general risk off day on Wall Street. And that kind of spilled over a little bit into the ag sector here today before we found some of those rallies, John.
Yeah, that started on Thursday afternoon in terms of the equity futures. And again, a lot of concerns regarding the bonds and the interest rates. What's the Fed going to do? We did see things come off our low. In fact, the Dow actually turned a little bit positive here just a bit ago. So again, the sellers may be finding a bottoming point, but trend doesn't look very good in that market. That's really what it kind of felt like this morning when we kind of got started. Then obviously we'll get into the livestock here. Strong selling there today as well. It just felt like money was moving to the sidelines early. That's why even the corn performance and getting back to positive territory today even looks even better, just given the way the whole market complex was handling the day today.
Well, let's move more into livestock. That cattle on feed report from Friday, a very bearish report. A lot of the pre-report estimates were widely missed. In fact, highest April 1st inventory since the series began in 1996. So, no question that we got what we expected. We saw triple-digit losses throughout cattle here today on the futures trade. what do you make of the cattle on feed reports and just the tone of this market now moving forward into the month of May, John?
It's kind of an interesting cattle complex right now. Obviously that report came in pretty heavy compared to what the market was anticipating. And, even the placement number being high again, we keep pulling these cattle out of the pastures faster than we want. We'll see if that shows up down the road. Yeah, typical result. I expected that today. Somebody almost felt like they had a little bit of a head on that when the way the market dropped on Friday right at the close. So we'll see. Now, let's come back to cash trade. And that's what I'm talking about. It's a hard market to read, talking to producers. Packers are calling. They're probably still going to bid up this week. So we could easily see a recovery off these prices. Plus, the April contract expires this week, too. So that'll keep some selling or some choppiness in the market as we get close to expiration on that on the 29th. So it'll be an interesting week to see how it goes. We did come off the lows a little bit here today. So maybe that was just, kind of rejecting that area. We'll have to watch how the cash trade develops this week. I'm expecting things to be firmer to higher. Obviously, all of a sudden, this shot of extra cattle out there might make a difference in that regard, at least in terms of those bids. But the trend was pretty nice last week. I still think cash will wind up being the king driver of the week. But now maybe, again, we've established a top, and maybe with this move today, a bottom of a range.
Well, and the cold storage numbers came out Friday as well, and we saw total red meat supplies up 1% from last month. That cold storage number, though, really affected the pork market, the hog market today. Frozen pork supplies were up 2% for the previous month, up 8% from last year. So you take those numbers into account, and then you just take the action on futures today, sharply lower day for the hog market, John.
Yeah, top and limit down on that June contract today. And against combination of the lack of demand or the concern regarding demand, Chinese pork sector, again, you're dealing with that Shanghai issue in terms of the COVID lockdowns. That just, when China gets a cold, it affects those markets that come right to it. Crude, soybeans, pork, those types of export markets seem to be reflected there. So again, maybe that's where we saw that build up, especially in the pork belly side of things. It's just that overall lack of demand. Even though it's good, it's still soft compared to where it has been. And then you still got to throw that premium of the futures market into the cash market in there. And we're still working that out. It was an ugly close in those June hogs today, right at the bottom of basically support levels. Feels like if we break that through tomorrow, we'll probably drop it another $4 or $5 pretty easily. Then we might have ourselves getting back to a point where it's a value again. But I think this market needs to finish this correction first before those buyers will step back in here. So, again, it stayed in the front months. I still like the longer term picture, even though they were negative today. There's still at least some support in those deferred contracts. Again, that's just reflecting that overall tight supply that's still coming in front of us here. So, like I said, we may have to get through some pain first before that market becomes a value on the front end. But I still, again, like some of the longer term picture that we got there.
Well, one has to wonder too. One more thought on the hog market. Just if we do a little liquidation here, maybe make hogs a bit cheaper, even though $100 hogs aren't necessarily cheap. One has to wonder if we cheapen up the hog market just a bit. If some buyers step back in to give us some momentum to push higher, John.
I think that's a definite possibility, especially with the tighter numbers longer term. So, we'll kind of watch this area here for hog producers. Might be a window we'd look at some longer range calls to sell into down the road, just to keep your upside open and take advantage of that. But again, at the same time, we're seeing some good money flow. There's obviously the demand concerns, and that affects the cattle side too in terms of inflation and consumer spending and things along those lines. So there's still some headwinds that are out there over the entire livestock complex that are a little bit concerning. But again, still comes down to supply. And that fundamental number for both cattle and hogs is going to continue to tighten as we go forward, especially if the corn market stays firm.
John, as well, dairy market looks like a fairly quiet start to the week, at least as I'm looking at numbers right now. What are your thoughts with what's going on in dairy?
Yeah, we have mixed, choppy trade today. Pretty rough week last week, kind of getting us back down and checking some support levels. Just feels like maybe we're getting a bit of a range here. 24 on the bottom, 25 on the top, give or take some cents on each side. So at least it feels that way. Demand continues to be strong. We see that on a weekly basis in terms of export demand. So that's going to keep some support on this market. But you got cheese trade back in the 230, 240 window. That usually kind of brings that milk price down in that time frame. So right now, at least, feels like the market's going to stay supported. But again, producers got to understand there's value out there. We could see both things move pretty quickly in terms of input costs going back up and the cost of milk and the price that we receive coming back down, tightening those margins. I think producers need to stay on edge here. We're at historically high prices. I'd rather have a floor underneath and watch it go worthless and keep that top side open.
John, great stuff as always. Floor is yours. Any final thoughts you have for us on this Monday?
Really keep an eye on that what's happening with that equity market. We can see a lot of money move very, very quickly. We had to get a little bounce here this afternoon. We'll see how it closes today. Watch what's going on with the US dollar index. We continue to climb higher, and we haven't really talked about that much in terms of what's going on with commodity prices. That might be some of the reason we just can't seem to get any traction in the wheat market. It's just US wheat is not competitive. Export inspections were very poor again today here as we're getting close to the end of that marketing year. So those are some headwinds that might be out there that could very quickly cause some liquidation. So we just got to be cautious. These are still going to be extremely volatile times, and this market's going to move headline by headline.
Well, John, if producers need some advice here as they are looking at their marketing plan, getting into spring planting season, which is no doubt a busy time once we can get some more tractors rolling in the fields. If they want to reach out to you, the team there at Total Farm Marketing, what's the best way to do that?
Sure, love chat with them anytime. Feel free to give me a call, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. And don't forget about our website, totalfarmmarketing.com. Again, a lot of great information for producers to take advantage of.
John, appreciate the time as always. Have a great rest of the week, sir, and we'll talk to you next Monday.
Sounds good. Have a great week.
John Heinberg with Total Farm Marketing joining us today here on Market Talk. That's going to do it for the show on this Monday, April 25th. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.